Could the unstoppable Toronto real estate market be finally hitting the brakes? With whispers of price drops on the horizon, people are asking, when and by how much? If you thought Toronto real estate was a guaranteed bet, think again. Stick around and I'll talk about what's actually causing this shift. So let's get into it, right here, right now. Hi and welcome back to Everything Toronto. And for those new to the channel, I'm Fred Renna, a local real estate broker right here in Toronto, Ontario. And I specialize in helping people from around the globe relocate to, from, and within the Greater Toronto Area. Are home prices in Toronto ever going to drop? This has been on the minds of every homeowner, buyer, and investor in Toronto. And after years of skyrocketing prices and bidding wars, the market has finally started to cool off. But prices, well, they're still going up despite the cool down. For years, Toronto has been one of the hottest real estate markets in the entire world. And over the past 4 months, even as sales have dropped and inventory has increased, year-over-year average prices still went up. Though just slightly, they still continue to rise. And if you're curious to know by how much, watch my full market update linked above. But now we're starting to see cracks in the foundation. A recent report has thrown a curveball into the real estate conversation. While many industry insiders were optimistic that Toronto's housing market would continue its upward trajectory, this new data suggests the opposite. The report forecasts that by the end of 2024, Toronto could see home prices drop by as much as 7%. That's a huge shift, especially in a city where prices seem to only go up. But that's not all. This potential decline isn't just a temporary dip. It could signal a more prolonged adjustment in the market, affecting a wide range of properties, from luxury homes in downtown Toronto to more modest houses in the suburbs. What's even more surprising is that this decline might not be limited to Toronto alone. Other major Canadian cities like Vancouver, Calgary, and even Halifax are expected to experience similar trends. So why is this so surprising? Well, it's because for years, Toronto's been seen as an almost invincible market, one where prices only seem to go up no matter what. But we're starting to see the first signs of vulnerability. So what's changed that could cause prices to fall? Let's start by looking at the key factors contributing to the potential drop in prices. One of the most significant factors is the interest rate environment. After several years of rising rates, the Bank of Canada recently introduced modest rate cuts. While these cuts might sound like good news for potential buyers, they haven't been substantial enough to make a real impact. Many Canadians are still dealing with higher borrowing costs, and according to a report by the Toronto Regional Real Estate Board, a 0.25% cut isn't enough to bring buyers back to the market in droves. In fact, TREB's polling suggests that a cumulative rate cut of at least 1% is needed before we see a meaningful change in buyer behavior. These high borrowing costs have made it more difficult for first-time home buyers to enter the market, and have slowed down the activity of move-up buyers who may have otherwise fueled demand. When borrowing is expensive, fewer people qualify for mortgages, and those that do may qualify for less, reducing overall buying power in the market. Number 2, increased housing inventory. The Toronto market is experiencing an increase in the number of homes for sale. This rise in inventory is partly due to economic uncertainty. Many homeowners who might have held off selling during the peak of the market are now listing their homes, hoping to cash in before prices drop even further. In July of 2024, we saw inventory levels rise significantly, causing the market to lean towards a buyer's market. In fact, the average time a home sits on the market in the city of Toronto has increased from 18 days in July of 2023 to 24 days in July of 2024. For buyers, this increased inventory is a double-edged sword. Yes, it provides more choices, but it also signals that sellers might be willing to negotiate more aggressively. Number 3, mortgage delinquencies are on the rise. As of the first quarter of 2024, Toronto has seen its mortgage delinquency rate double compared to last year, reaching levels not seen since 2016. This is a critical sign of distress in the market. Rising delinquencies suggest that more homeowners are struggling to keep up with their mortgage payments, which can lead to an increase in distressed sales. In other words, properties that are sold quickly and often at a discount in order to avoid foreclosure. This trend is particularly concerning for investors and homeowners with high levels of debt. As more distressed properties hit the market, they can further depress overall home prices. And lastly, broader economic pressures and affordability challenges are playing a huge role. Inflation remains higher than desired, and while it's starting to cool off, it's eroded purchasing power. Everyday costs like groceries, utilities, and transportation are still high, leaving less disposable income for potential homebuyers. This, coupled with already high costs of homes in Toronto, has made it increasingly difficult for many to afford a home, even with the recent rate cuts. But the issue about affordability isn't just about home prices. It's also about the costs of maintaining a home. With inflation affecting everything from property taxes to home repairs, the overall cost of homeownership is becoming a burden for many, pushing some homeowners to downsize or sell off properties that are no longer financially sustainable. These factors, when combined, create a complex environment where downward pressure on home prices seems inevitable. Buyers are cautious and inventory is up, and financial strain is becoming more visible, all of which contribute to a market that's ripe for correction. So, what can we expect as we enter the fall market, assuming that the Bank of Canada will continue to decrease interest rates? Here's what I think will happen. If the current economic trends continue, then the expected rate cut could inject a bit of life into the fall market. A decrease in interest rates would lower borrowing costs, making mortgages slightly more affordable for potential buyers. This could lead to a modest uptick in buyer activity, particularly among those who have been sitting on the sidelines waiting for a more favorable environment. However, the impact might not be as significant as some would hope. While lower rates will make it easier to qualify for a mortgage, the broader economic challenges, like the effects of high inflation, rising living costs, and overall economic uncertainty, will weigh heavily on buyers' minds. As we enter the start of the fall market, we might see a stabilization in prices. However, this stabilization in prices will be temporary, as it's expected that prices will fall as we approach the end of the year. Looking ahead to 2025, if the Bank of Canada continues with further rate cuts, we could see a more substantial shift in the market. Prolonged lower rates may gradually restore buyer confidence, leading to increased demand. But remember, the inventory levels are still high, and mortgage delinquencies are rising. This means that while some areas may see slight price decreases, others, particularly those with high numbers of distressed sales, might see drastic price drops. To sum it up, the Toronto real estate market is facing some serious challenges. High interest rates, increased inventory, and rising mortgage delinquencies are all contributing to what could be the first significant drop in home prices in years. And while the rate cut might offer some relief to homeowners and buyers, it's unlikely to completely avoid a substantial downward trend in prices over the next year or so. If current trends continue, we could see a robust buyer's market emerge by early next year. This means more negotiating power for buyers, but sellers may need to adjust their expectations and be prepared for longer times on the market. But to be clear, the market's overall trajectory will heavily depend on broader economic conditions, the pace of future rate cuts, and how effective the market absorbs the current inventory. Now is the time to pay close attention to these trends and plan your next move carefully. The key here is to stay informed and to be ready to act quickly as the market continues to evolve. So what do you think? Are we really about to see a major shift in the Toronto real estate market? Or is demand for the area just too strong to let this happen? Let me know in the comments below. And before I leave you, just a quick reminder that if you're thinking of moving or need help figuring it all out, reach out to us anytime. Every day we get calls from people just like you planning their next move. Whether you're moving to, from, or anywhere within the Greater Toronto Area, we've got you covered. Our team is dedicated to providing tailored solutions that match your needs and timeline to help make your move easy and stress-free. So if you're planning a move, feel free to give us a call, send us a text, or drop us an email. Thanks for watching, subscribing, and liking this video. And don't forget to tap that bell. Thanks again, and I'll see you next time.